Okay. Assalamu alaikum. Good afternoon, everyone, and welcome to NBO's interactive session. This is Aisha Al Musa, Investor Relation Officer. In today's session, we will discuss our half-yearly financial results for June 2025. I will now introduce you to our management. We have Mr. Abdullah Al-Hinai, our CEO, Mr. Akiri, our Chief Financial Officer, Mr. Rashad Al-Jah, Head of Regulatory Reporting, and Mr. Swami, Head of Business Performance, and Mr. Balaji, who's joining us remotely. He's Head of Capital Management and IR. Mr. Abdullah, can you start now?
Thank you very much. Pleasure to have you all on this call. Basically, our agenda is to present macroeconomic picture, operating environment, NBO and its strategy, and then Giri will take over with the specific financial performance, including the performance of the bank in the first half of this year. Please feel free to interrupt us and ask any particular question, and if you need us to speed up or slow down, do let us know, please. Thank you. Yeah. The first key slide is the key messages that we would like to give you with this presentation. The bank has a long pedigree. It is the first locally incorporated bank established in the Sultanate of Oman with more than 50 years of experience. This means that over the decades, we've garnered long-term relationship with different segments of the market, be it sovereign, be it government-related entities, be it local business houses, as well as the bank is run with well-established senior management team that the majority of them have actually been inducted in the bank end of 2020 and early 2021 with significant expertise in banking and management of the bank. Myself, I've completed close to 28 years in banking. 28 years in banking, working in local banks. The banks embarked on a transformation journey, which started in early 2021 with a 5-year strategic roadmap that was approved in the fourth quarter of 2020. Alhamdulillah, with the grace of God, we've achieved a lot of what we've set ourselves and committed to different stakeholders over the past 5 years. This strategy is coming to a conclusion by the end of this year, and we are in discussion with our new 3-year strategy roadmap. Like I mentioned, the existing strategy has clearly shown its result through either quantitative or qualitative aspect of a bank's performance, from profitability matrices, from cost to income ratio metrics, ROE metrics. There's been substantial improvements over the past 5 years with a consistent performance quarter on quarter. Another key aspect is the sound macroeconomic picture in the country that is definitely helping us. Key aspect is that through different government programs, the government has been very successful in bringing in issues that it has struggled in the past. This has resulted that rating agencies, and I see some of the rating agencies here on the call, have upgraded Oman back to the investment grade ratings. We as NBO, we've just been recently upgraded by one of the rating agencies that rates us as well to investment grade. This particular slide, I will talk or summarize it. In particular, On the macroeconomic picture, growth is very clear and visible across oil and non-oil sectors of the market. Public debt, which was an issue, has been clearly managed extremely well by the government. Today, the debt to GDP is basically around 32%, down from as high as 70+% years ago. The government also has focused on the social aspect. 2 years ago, they launched a new entity called the Social Protection Fund. Basically, the aim of this fund is, other than managing and establishing a strong and robust retirement packages for either private sector or public sector or even military personnel, but also started launching a number of interesting and key social protection benefits, that is improving the social protection umbrella over the population as well as the expatriate workforce. Some of these programs include benefits for disability, elderly persons, for youngsters below the age of 18, etc., maternity insurance, and there are more coming in the future. On the technological side, the country has clearly embarked on transforming itself, and in particular in the banking sector. Open banking in India has been there for some time now, but this year a new guideline has been released by the Central Bank of Oman, including licensing regime for digital banks. On both these aspects, and we is on the forefront of the curve here. On the environmental side, we are at the start. Oman, and you see that in some of the upcoming slides, has committed to net zero. We've embarked on our ESG. 2025 was the first year where listed companies had to publish a full ESG report and disclosures. We are also been tasked with also launching a number of products and services in the market in the coming years. This is a summary again about Oman for people who are not familiar with Oman. Like I said, rating agencies have looked at Oman very positively over the past at least 12 months or to 18 months, with rating agencies upgrading Oman to back to investment rate. Key aspect that I want to present on this slide is at the bottom right-hand side of the slide, particular on Oman's effort to diversify its economy away from direct oil exploration and production, which was about 51% in 2013. Today, it's around 35%, with more contribution from sectors like tourism, hospitality, and other segments of the economy. The Omani banking sector has definitely positioned itself as a robust and well-managed and well-supervised sector. There is a very strong regulatory regime supervised by the central bank and enforced by the Central Bank of Oman on the local banks. As a result, Omani banks have weathered the storms of the past, in particular the COVID situation, and continues to perform reasonably well, and seeing growth year on year, either on the assets, on the deposit, and improved liquidity, and reduction in overall or maintenance of decent level of NPL. On the key ratios, I would like to just highlight that the cost to income ratio here average is around 43-44%. It might seem to be slightly higher than our peers in the region, but Oman has historically been having high cost to income ratio given the large geography and the need for distribution channels, in particular branch network, to serve the population spread across the country. Oman is the second largest country in the GCC Oman area. I've talked about the sustainability, and again, in particular, CBO in October 2024 issued a circular promoting sustainable and green financial practices, which basically provided regulatory requirements for climate risk management, the governance strategy, and disclosures perspective. Like I've mentioned as well, that in this year and next year, banks are to launch green products and improve sustainability practice. This is definitely in tandem and in line with the overall vision of the country and the economy in general, where Oman Vision 2040 and the net zero commitment by the country by 2030. Now to NBO in particular, we're zooming into NBO. National Bank Oman is the first incorporated bank in the Sultanate, established in 1978. We are a listed entity on the Musqat Stock Exchange. Currently, our main operating business is in Oman, with two branch presence in the UAE, both in Dubai and Abu Dhabi, while we are in the final leg of closure of our Egyptian branch operation, which started sometime around 2013-2014. The shareholding has been very stable, with commercial bank of Qatar owning approximately 35%. This is a very long-term relationship that commercial bank of Qatar came in about 20 years ago. Sheikh Suhail Salim Marwan owns a little bit less than 15%. Again, a very historical and long-term relationship and shareholding with the bank for more than years. From a rating perspective, we are rated by Moody's and Fitch. In particular, Moody's have upgraded us to this. This is a slide that we always presented to investors. This summarizes our strategic priorities and the key pillars of our key strategy. There are three priorities. Safeguard, basically ensuring that we have a strong and robust both balance sheet and financials to ensure that we are able to weather all uncertain conditions and ensure that we maintain healthy levels of liquidity, capital, and ensuring of highest quality of credit underwriting processes. Then value creation, building on safeguarding creation of value through enhancing revenues, through ensuring that we have the right operating models, ensuring that we have enough business lines that will generate us the revenues required, as well as managing and optimizing costs, spending in the right places, and ensuring that we reduce waste and expenditures in the wrong places. Partnership is part and parcel of our business model as well. And then building on the value creation is to ensure that the performance is sustained and we invest in the long term, ensuring that there is a lasting capabilities through ensuring we have a very strong brand policies, digital and investing in technology, the right places, and enhancing and improving skill sets for our. So, These are particular items that explains the different pillars of our strategies. I'll not go through each one of these, but happy to take any questions that you might have. It's just details of our strategy. Like I mentioned, our current strategy, the one you see in front of you, will end by end of this year, and we are in the process and discussion with our board for our new strategic direction. Again, we've talked about the ESG piece and euros committed in line with the commitments of the country, be it through the Oman Vision 2040 and the net zero commitment and across different elements of the ESG. This is the first half financial snapshot. I'll request Giri, our CFO, to take us through this and the historical performance of
Thank you, Abu Hisham. Assalamu alaikum and good afternoon to all of you on the call. With your permission, I'm just going to straight away jump to the next slide, which talks about the financial performance and gives you an overview of where we are for the first half, as well as a little bit of historic context. On the right side of the slide, you see the profitability metrics that we've achieved over the last, from the period 2022 onwards, likewise the operating income composition and the impairment numbers. You can see that we've executed well on our strategy. So as we've committed, actually, we have not put out, and given a number of you on the call have been with us through this journey, we've not put out the starting point. We started off, the CEO and myself and the management team started their journey when the cost income ratio was north of 55% and the return on equity below around the 5% mark. You can see that for the first half of this year, our cost income ratio is 40.76, better than the industry cost income ratio of even 43%. Similarly, the ROE, around the 8.88, 9% is what I would sort of round it off, and then improvement in the ROA as well. The NIMs here is compressed, obviously. I'll cover that in a little more detail now. Clearly, cost of funds in Oman have gone up. A number of you are aware that the currency is pegged to the US dollar, but the rates don't any increases or decreases in the rate don't translate in the local economy immediately, unlike some of the other economies in the region. So there's a bit of a delayed lag, and as I explained in the call for the full year results, we were impacted through an increase in the cost of funds. That's being addressed. Our cost of funds in the second half of 2025 is lower than where we ended 2024 with, from 3.96% to around 3.78%. So we've done well there, but further work remains. Our CASA ratio, which I'll cover when I cover the balance sheet, but these are linked again, is now above 50% again. So that's been a good story. Then you see the other piece, which is the impairment piece. I don't want you to think that our impairment number is low. That's because we had a better recovery during the first half of 2025, much better than what we had in the previous year. I'll quickly give you a few more slides on the asset quality, capital, and Muslim, and then we can open up for questions. Given a number of you are familiar with the numbers, and these numbers have been out in the public domain since 29th, I think, of July. The asset quality, is very important to us. I keep repeating in the call that we don't run the bank for a quarter. We had a 5-year strategy that we were delivering to. And as the CEO mentioned, that includes safeguarding of our asset base. So we've been very conservative in our loan growth in terms of the composition of the loan growth. 2/3 of our loan growth over the last 3 years has been primarily in the GRE segment. Here in this slide, you can see that the staging, exposure or staging is given. We have a very diversified book. On the left side, you see the pie chart gives you the breakdown between retail, wholesale, and the financial institution group, and the provisioning levels over the years. All of this is being addressed. And as I said, we don't take a short-term view of this. The CEO, myself, and the CRO have a view around executing on the and the rest of the management team, executing on the 5-year strategy, being prudently provided, and slowly but surely we built in a reputation in the market for no surprises, a steady performer, improving year on year, improving our coverage ratios, reducing the NPLs, etc., has been our strategy, coupled by focusing on the right areas of the growth. That's what the summary of these slides really. I have 2 more slides to cover, and then we can open up for questions. I keep telling you all that we believe in a fortress balance sheet. We believe that we need to be well capitalized and liquid. That is what we've achieved, which we continue to achieve, right? You look at the comments there, the stable funding ratio, the CASA ratio at 52.8%, liquid assets really well, LCR at 161%. Similarly, the capitalization levels at 16.6%. So we are well above the central bank norms. We are well capitalized and liquid. This is a key strength of ours, and we want to make sure that this is always the case. Similarly, when I talk about the cost income ratio, and I'm sure you'll have some questions for me, we generally try and ensure that our income is growing faster than the expenses. So likewise here, well capitalized, liquid. We continue to be well capitalized and liquid, ready to seize any opportunities that come our way. Lastly, we've added a slide on Muslim as ever. This is just to give you a view. For some of us, there is demand for Islamic assets in the region, outside the region as well. So, you see that our Islamic banking performance, which is a window, Muslim is a window of the bank, has grown impressively. I do acknowledge that the base is smaller, but this continues to be an area of focus for us. And, albeit the base being small, we are focused on that. To sum up, we had a good first half, delivering on our strategy that we set out to achieve. Clearly continuing to execute on the strategy, well-defined strategy during Q3 and Q4 is our priority. As the CEO mentioned, we are working on the strategy for the next 3 years. That will be approved by the board, in the last quarter of this year. And we hope to be able to sit down with you post the full year results to present that to yourselves and obviously, take any questions that you may have. Let me open up for questions and comments from yourselves. Obviously, there's more detail on the balance sheet in the subsequent slides, and these numbers are in US dollar millions, but we don't go through them as ever, right? So let's open up for your questions, and thank you once again for your time. Manish, please go ahead.
Yeah, thanks. Am I audible?
Loud and clear.
Hello?
Yes, you're loud and clear.
Yeah, thank you. Thank you for the opportunity and then good set of numbers, and congratulations for the track which the bank is having for the last 2 to 3 years. I have 2 questions, one on the business side and one small on the accounting side. So on the business side, just like to have a commentary or outlook on the stage 2 loans. So we have seen the stage 2 loans coming down from the 20% zone to around 12%, the net stage 2. And if you look at the period, say 2014-16, the good period, which was around 6 to 8% range. So do you see any trend that they should fall down to around 10% in the next 2 years because of the high frequency data points you will be monitoring on the credit portfolio? And second was on the equity capital. So I'll have that question later on the equity capital.
Give you a little bit of more details. So like you've been on the calls for now few times as well, and you always heard us that our underwriting, credit underwriting procedures has been strengthened over the past 5 years now. Our focus has been predominantly on high quality book, and that's the real driver of the growth in our book. So that is basically building our stage 1. On the staging overall, we've adopted a very prudent, a little bit on the conservative side. We hear overall kind of views by different stakeholders that they use NBO as a benchmark for how they deal with staging and NPA in general and provisioning coverage. So again, it goes back to our key strategy, ensuring that a robust underwriting policies over the past 5 years now, building a high quality, high caliber book, be it here in Oman, even in UAE, or even through the Muslim business.
Thank you, Hisham. Yeah, I think that answers most of it. Our view to provisioning and staging is being more conservative than some of the other players in the industry. Obviously, you cannot share customer information, but we are aware that, for example, an exposure which is classified as stage 1 in some other banks would be as a stage 2 in our numbers. We want to manage this portfolio conservatively and prudently. That dictates some of it. As I mentioned, 2/3 of our growth is in the GRE segment. That also has a bearing on it. Then the other piece that I cover is the fact that these also are dependent upon overrides and what the CRO has powers to do. We've again looked at it from a very conservative perspective. That's the reason why it is. We don't, should it be 10%? That was part of your question as well. Should it be 10% or so? No, we don't put out forward-looking guidance. But once again, to reiterate, we will continue to manage the growth in a very conservative manner, in line with the risk appetite statement, Manish.
Sure. Thanks. And that goes well, but not the guidance, but I just wanted to have a view on the trend. What we are last 2 years, 3 years has been very good in terms of the underwriting and the overall scenario. Considering the macro aspects, because beyond the macros, there is a limited hand on the management level to go beyond the macros. And if the trend is supporting, then of course we can move back to the sub 10%. That was the whole idea. Thank you for that. And next question was on the equity capital. So we have been one of the few rare banks in Oman which have not been raising equity for the last 12 to 13 years. And the CET1 has a buffer, 1.6 and around 11%, but the payout ratio gets reduced because of that. So is the management having any plan or certain strategy in the next 1 year or so, considering the credit growth ahead for equity raise?
Manik, we were trying to stop you earlier on, but let me give the floor to the CEO for a bit, and then I'll come back.
Yeah. Okay. So I'll attempt both questions again. Just back, I think very importantly in terms of where we see market and risks in the market, I think we are more comfortable now in terms of the risks that are there in the market, and given the underwriting policies that we've adopted over the first 5 years, I think we are more comfortable now on the market from a risk appetite perspective. So that's just that gives you an indication. But like Girian told you, we don't give forward-looking numbers a bit. On the question on the capital piece, we are again very disciplined in this part. Number one, we have a conversation on an annual basis with our board, and sometimes more frequently than once a year in terms of what is the capital required. It's very difficult to go back to the shareholders and say, give me capital when ROEs were 5%. I think it's very important to demonstrate that we have a strong and robust and sustainable ROE before we ask for capital. And again, we are very conservative on that approach.
Yeah, thank you, Abdullah. So Manish, look, we've again chatted through this. We certainly were not going to be in the camp where we pay a dividend and then ask for rights, right? That didn't work for us. We don't do that. Having said that, yeah, your point was valid that we've not had a rights or a capital raise in 20 years or so in a long period of time. But we also told you that we're looking at the strategy for the next 3 years. as we look through the asset growth projections, etc., then we'll determine what's the optimal capital mix for the firm, for the bank, and say that, this is what we need, taking into account the improvement that's been achieved in the ROE numbers. And, some of this credibility is there with us now to be able to have those conversations, and we'll update you as we go along. Okay.
Thank you. Thank you. Just one question on the accounting side, a small question. If I look at the balance sheet of the June 2025, on the face of it, the net asset per share is mentioned at around 483 levels. I'm not sure how that number is because if you have equity of 560 and 1.6 billion shares. So it's not, I think, here, it's on the financial which are uploaded on the MSX. So
Answer that question later. Yeah, we'll check that number and update you later in the call.
Sure. Thank you, and all the best for your future growth. Thank you.
Any other questions?
More questions?
Any further questions we can
Just
to try and respond to them?
That is all. It's all EPS, right?
No.
yes.
What is
See your equity development membership.
That will make
it? That's what.
Manish,
Yes. Yeah.
can you repeat your question again on the accounting piece?
Yeah. So basically, the net asset per share, which is mentioned on the face of the balance sheet, So that mentions 483 or 484 paisa per share. But if I divide the 560 million by 1.6 billion shares, it comes to around 345.
Half year or a year?
And this is asset per value, no? So you got to divide the total assets by each number of shares.
No, net assets per share. So that's basically the shareholders' equity divided by the total outstanding shares, right? So that's so if you look at any other banks, normally they don't consider the perpetual instrument as a part of the shareholders' equity. This is a part of the total equity, but not part of the shareholders' equity.
Which slide are you looking at?
Which page are you looking at? The financial?
The balance sheet.
Filing statement is page number 7. Are you looking at that one?
Yeah, the balance sheet, because we get as a separate this thing from the MSX. So let me open the.
Financials that we send out to.
It's the format of MSX.
Same.
That's it.
Yeah, same. That details matters are listed.
Can you
Maybe email it to us and then we'll respond to you.
Can I share it now on the screen?
Yeah, if you can.
Sure. Let me share my screen. If someone else is sharing, I will. Yeah, is the screen visible?
Okay.
This the 483 paisa net asset per share. So the numerator would be this 560, right?
So it
What he says, it should be excluded.
It includes 18 capsules. That's why it has been done. Correct. So it is basically 780.
Yeah, so basically 785 million, which includes the 81 capital.
Yeah, okay, that because normally well, it's the shareholders' equity, right? Excluding the perpetuals.
Sixty divided by the capital, 162. 625, 26.
345.
345. Is
Yeah,
that
yeah, 345. Yes, yes.
So you're saying the rest of the banks are excluding,
Payment.
we'll see what the industry presentation and then.
We've been reporting always like this only. So yeah.
Sure, if we because the institutionals will have their own working, but if a retail guy looks at this and NAV per share and compares the discount on the book value, it will give a wrong signal. Right?
This is the way we've been presenting. We can check what the other presentations in the region are as well. Yeah. Okay, thank you.
Yeah, thank you. Thank you.
Thanks, Manish.
Thank you.
Any other questions or comments? If not, then we'll close the conference.
Anyone else has any other questions? So I think that's it. We came to an end to this session. I would like to thank you all for joining us today, and we would inshallah see you in the upcoming session. Inshallah.
Thank you.
Thank you.
Thank you, everyone.
Thank you for your participation.